This is Ken Lake with MAC's technical comments for the grains on Thursday, February 9th. I'm going to start tonight with the USDA crop report that was out this morning. And you can see that they really didn't hurt us all that bad. The thing to be concerned about is right here in wheat. We did see world wheat stocks come down 5 million metric tons, which is kind of what we've expected. We know that production is going to start dropping in the world because of price over the next 12 months. So we've seen that. So if you drill down on the countries in this wheat number, you'll see India was way down from their stock standpoint. The corn, also world corn, down about 3 million tons, but soybeans stayed about the same. The thing to concern yourself with would be down here in Brazilian corn and beans. USDA actually dropped Brazilian corn about 1 million tons here, 500,000 tons, but the internal USDA of Brazil, the equivalent of USDA in Brazil, has that number higher than what USDA has, and likewise for their beans. They've got their bean production number about 1 million tons higher than what does the USDA here in this country. So we'll continue to watch to see what the production numbers come out of CONAB in South America, in Brazil in particular. So March corn, we've talked before about the corn values having overhead resistance at this 200-day moving average, closed 2 days in a row above that. That's kind of friendly. The market is overbought and due to correct lower. You can see as this black line crosses the pink that that's the start of a sell signal here. So I'm not all that friendly corn. Fundamentals are terrible for corn, especially in the old crop. So don't get too married to your corn here. We should be letting some old crop corn go. I've recommended sales in this 370 range. Notice we traded or closed at 369 with a high at high trade today at 72 3/4. If you have sold old crop corn and want to use targets, we're going to use these numbers in here. So 376, 379, 382 would be targets if we want to move this corn crop higher. I don't have good confidence that that's going to happen, but nevertheless, if you have sold old crop corn and want to set targets higher, those would be the target values to use. Talk a little bit next about December corn. Talked in the past about how D's corn has stayed above this 390 mark. We traded 398 today. Actually, 398 3/4 was a high trade, closed 395 3/4 though. But anyway, we've had 3 days higher there, and again, a bit of a sell-off signal coming right here. So we're a little nervous about 2017 corn only because we see input costs continue to drop, giving Midwest corn farmers a signal that they can go ahead and plant that corn. So we're recommending hedges in this range. If we do move higher and you want to use higher target values, then we're going to use 405 and 410 as those targets. Notice contract high in the D17 occurred last June at 420, and there's really no reason whatsoever beyond a major crop production problem this summer to believe that corn is going to trade above that value. There's just adequate stocks to buffer any sort of problems that we're going to have coming out of South America. So to hold on to corn here, you're going to be holding this stuff till mid-August to see if we trade that old contract high. So we need to be starting to hedge the 2017 crop right here.